Thanks so much for coming. Hope you've been having a great week. The volatility has been just fantastic in the S&P. Let's take a quick look at some of the things that have happened. Going back, many of you that are not subscribers, you don't know some of the things that I don't bring up in this meeting. I do want to bring something up that I normally don't talk too much about here, but the week of the 18th, let's put up a weekly chart very quickly. So we're looking at a weekly chart, not a daily chart. I had indicated to everybody that this week, if the market could get above 42.22 to 23, which I'm going to put my cursor where that is, it's right about here. If it could get above that level, roughly, then it would be, and if the week was, when it did that, the week of March 14th, and it was the week of March 14th when they got above that level, then the market would be in what I sometimes refer to as a conflict period. And conflict doesn't mean the news of conflict out in the world, like Russia and Ukraine. It's actually conflict within the market itself. And when we use the term conflict, it doesn't always mean that the market's going to go down. We forecast this conflict period to have the market going up strong. And we gave the numbers where we thought they would be. And the period of time that this conflict period is the week of March 14th, if they're above 42.23, into the week of March 21st, which is next week, and the prices that we said that they would move up to, all of which have been completed. So this has helped us tremendously, this new additional piece, to be able to identify where larger, more important, and extended moves can happen in a very short period of time. Really, the ideal thing that a trader wants is a fast move in a short period of time. Many traders will say, I want a fast move in a short period of time. I don't want to be in the market for a long period of time. I want to be able to get as much as I can as quick as I can. But the reality for many, many people is that when they're in the market, they're so uncomfortable with being in the market that even if the market's moving fast, they get overly concerned that they better grab that money now while it's in front of them. And so 5 points gets in their favor. It's a 30-point move, and they just get out anyway, even though it ends up being a really fast move for significantly further targets. This is a skill. There's emotional skills that have to be picked up in the markets, and they're difficult to pick up because when people have spent so much time struggling with markets, having difficulty with staying ahead of the moves and being in at the right levels and not having to suffer through a drawdown and so on, that as soon as the market's in their favor, it's just sort of natural to say, oh, I'm just going to grab that because, that isn't my thing to do well in this. But you do have to practice at doing well. I've said it many times. People are very comfortable holding on to losing positions, maybe not super comfortable, but they're a lot more comfortable holding on to a losing position with the hope that it's going to come back than they are holding on to a awesome position that is going to continue on a whole lot further. I joke with people that are in the markets, sometimes when they're in a good position, but they're tormented about getting out of it because they're in a lead. And I don't give personalized investment advice to people, but as a joke, I tell people, hold it like it was a loser, right? Because most people are very good at holding on to losing positions, but not so good at holding on to a substantial, fast move that's underway. So that's what we had this week. And one of the benefits for the people who are subscribing is I'm giving out all of the conflict period indications, which are much larger and faster than normal moves. and sometimes much more extended than normal moves. The time period, where it starts, I mean, every detail you could want, what price it has to be above and what week it has to be in for it to be above that price and therefore in the conflict period, the price it's going to run to, the time period it's going to take to run to that price. I mean, all of it is given to you. And strangely, even though you have that, you're not going to hold for much more than 5 points because of the difficulty that we've talked about here today about the emotional side of trading. I've talked to you before and I've said, people say to me all the time, if somebody would have told me to go long Amazon at $200, I would have been a millionaire, or I would have been whatever. But no, they wouldn't have been, because when that $200 became $400, they would say I doubled my money, and they would run around telling their friends. And then when it went from 400 to 800, they'd say I quadrupled my money, and their friends would say, wow, that's just amazing. And before you know it, they don't want to have to go back to their friends and say they lost, because they're in the habit of telling their friends whenever they're making money. And ultimately they'd get out of that position hell and gone from where Amazon is today. There's no way. I mean, I just bluntly tell people, there's no way you would have held all the way to these numbers. It's not even in the universe. You could live 10 lifetimes and you wouldn't have done that. So don't kid yourself. I'm talking to them, and say, if somebody would have just told you this, that you would still be in it, because most people can't do that when they're watching the market day to day. Strangely, a very powerful technique does exist for you to be able to hold on to positions, which is to be distant from the market. That means that you're at your job, you're not sitting watching an app all day or watching your screen, and you're just looking at the end of the day, closes or whatever, where the market is, or even maybe at the end of the week, you're leaving the thing alone. I know people who have done very well in the markets who are nowhere near the markets like you and I are, near meaning we're looking at it all day and so on. And these people are acting like they have developed a very high level skill to be able to hold on to winning positions, when actually they have no skill. They're merely not around the market, but it appears in the end that they held on to positions, and it doesn't just appear, they actually did. So it is a skill, one way or the other, to stay either buried in the market and know how to hold on to these positions, or to stay away from the market completely. That's a skill, and only check it once a week or whatever. You do also have to have the ability to know that a market is likely going to be moving, higher or lower or whatever the indication is. And in Amazon's case, that, if there could have been a forecast that would have been made for a multi-year advance or something like that, to be able to stay with it. So it isn't just a technique that you have to learn to understand a particular method or a trading system or whatever. I am anti-trading system. I don't really like systems. I won't go into it right now, but I do think that it's more than just that, because you have to execute. And the side of the whole thing where you have to execute means you really do have to be the guy that can begin to, and you can begin to learn to hold on and trade to targets that are distant, even though you may not, it just may be killing you. Take a look at this right here. This is today. This morning, when the market was about 43.98 in the first hour, we said the S&P should advance to 44.17 to 18 in today's third hour. It did. Here's the third hour price, 44.18. And then it should go to 44.31 to 32 in today's fourth hour. And it did. Here's the fourth hour, and the swing high in the fourth hour, 44.31.25. And the fifth hour went slightly higher, 44.31.75. So we got our 44.31.32. Now, when you look at this chart, and I say to you that, we said this, and we did, and it's all over the, we gave it to hundreds of people. When we tell you that, and you look at the chart now, you could easily say to yourself, I wish I was there so I could have just bought it here and held and made 30 plus points. But if you were actually here and actually did have to execute on this, unless you're skilled in taking these trades, unless you're skilled emotionally in holding on for targets, it is difficult. we have people that can do it. I mean, I don't know if we have testimonials up today yet or not. I'm checking just as you are right now, but let me just see if there's anybody in here that said they did. And, you know, we have good relationships with people. We're not dealing with people that are BSers and say, oh, I made this much or that much. Let's see here. Today is, this is March 15th. So they haven't, actually, this hasn't been updated for 2 days. So I'm going to talk to Trina about that. I don't know why that is, but this should be updated for today's action. But either way, those people, we do have people that are in the system that are taking these trades that can hold for the substantial, you know, completion of moves. And that's the final, I've said it before, it's like Star Trek. That's the final frontier. You and executing are the final frontier. There is a performance that you have to put on. It's in front of yourself. You have to perform. People would love to be able to make a lot of success out of something without ever having to perform. So markets appear that way because you don't have to do anything in front of people, but you forgot that you're an audience of one and you have to do this yourself. You still have to perform. You have to be able to live with the trade. If you look at these hours, this was the hour we gave out the information, which was the first hour of today. Then the second hour had a pullback down to here, down to 43.92. And if I broke this down, and I will, on a shorter term chart, so that you can see, let's say on a 15-minute chart, even though it doesn't look like a lot to you right now, most people, and I would dare say most of you, and I'm not accusing you here, I'm just saying I think this is going to be the case unless you have some skill, emotional skill, that when you got long at roughly, let's see here, these prices here, 43.98, you had to sit through a pullback, an advance, another pullback, another advance, another pullback, and then finally the big run came to 44.31 to 32. Can you do that? Can you trade a trend? Or does the price always have to be above your entry? Otherwise, it's no go. See, you have to ask yourself, how is it that you want this? Everybody would like to say, I'm just bought it and it just went up and I didn't have to worry and do anything. It just went and ran. And we've all probably had trades like that. But the reality is that even when you have that trade, you still have the trouble of not holding for targets. You may not even know a target, number one. And number two, the majority of your trades are going to have some crisscross. So can you live with, does it always have to be above your price? Or can you actually learn to see and say, I'm in a trend and the market's going to pull back and do these various things on the way to its target? If you can do that, the positive side is that you can be in many, many longer, better moves than presently, because looking on an hourly chart, it looks like all this was really easy, but there was a lot of pullback going on in these hours that would, make it difficult for somebody to hold on to a position. So just saying, you do have to perform. You want to get it, maybe you want to get away from having to perform, whatever that means. But in life, you always kind of have to perform, and you get tired of that. And you say, well, markets, I don't have to really perform. Actually, you do have to perform, even though there's nobody else there. But you still have to perform. You have to, A, believe, if you're following us, what we're telling you, and know that this is what you're going to place a risk on. You have to be able to stay with the position and manage the position all the way through to the completion. So it isn't as easy as it looks, but really any skill that returns gains, even robbing a bank, requires skill, and you have to perform, right? So a burglar or a criminal thinks to himself, I just want a lot of money, and I don't want to have to go to work, and I don't want to have to perform. I just want a lot of money. But he will have to perform. He's going to have to perform at a very high level in order to even have a shot at getting in and out of the bank without being stopped. And if he gets out of the bank, now he's on the run, and they have video of him, and he's got to do a lot of things to perform, right? So it's no matter where you go, no matter what you do, if you want to have a success at it, you will have to perform. whether it's for other people or for yourself, but you have to perform in order to have success. So there's no getting around it. And it's beautiful because when you raise your level even a little, it's a pleasure to now perform at that new level. That's a pleasure. And when you raise it again, that's another pleasure to be at that level that's higher than you were before. So it all can be done. It's all a skill. You've never heard me say that there's something magic that you need that you don't presently have, or that I have something magic. What I have is a long history of studying the markets and a lot of hard work in trying to understand the markets on, in my own way, right? Because I have to process the information and come up with, everybody would be the same. If you look at the market, you're going to process it in your own way. A lot of experimentation, a lot of thoughtfulness, a lot of meditation, honestly, on the markets, thinking about them, asking better questions, because the early questions are never the good ones, right? The questions that you start asking later, you need better questions to get better results. And better questions come about through experimentation and through study and through just the effort that we all make doing whatever it is that we do. And at some point, you sort of, you paddle until the wind comes, and then it's a pleasure to be on that boat. And the boat, in this case, happens to be all the things we just talked about. The ability to have some knowledge about what the market's likely going to do, and to be able to trade and execute on that. I'm not claiming, nor am I talking down to anybody here. I'm not pulling rank on anybody. I know what I know. I know I have skills. I'm not comparing them to anybody else. I'm not speaking to people like they're little peons and so on. Nothing like that. I hate that. I really do. But having said that, I am somewhere on Trader's Mountain, and you are somewhere on Trader's Mountain, and I'm encouraging you to climb and to understand that there is another level beyond the technical that you'll have to also accomplish. Let's see what's on your mind here. Let's talk about anything you'd like to. Stu says, hi, David, any completions on April Gold? Let me see. I don't think we had any completion. Oh, we did have a completion today. Let's see. 1996 in June. Hold on. We do have a trade underway in gold right now. So I'll bring gold up, but I can't go into too much detail on it. But let's take a quick look at it. I can't remember if we're in April Gold, or I think we are. So this is April Gold, and we're at 1929. We'd like to see them close around this level or a little higher, but the trade that we have it's the indication, the forecast probably won't be traded until Monday. Some people may actually be in already, but we're waiting for a daily close above a certain level. And if they do that, then we'll probably take advantage of it into Monday. It is to the long side if the indication is confirmed. So there is that issue of confirmation. Rob is here and he says, how about soybeans heading into the weekend? Thank you, sir. Thank you, Rob. We don't have a lot going on with soybeans right now. There is a larger forecast that if soybeans fails at certain numbers, that, and I'll give you the month, but I won't give you the full thing, but I'll give you at least the timing period for it, which, 1 minute here. Well, I'll tell you this. If the market can't do certain things on the upside, this is soybeans, then they're going to be substantially lower in May. So May is the period, and I've given out the price where they'll be in May to our subscribers, but I won't give out the full layout here for it, but I do want you to know that is, at least you have an idea that if certain things don't happen, and I will talk about it more as we get further out in time, but if those things don't happen, then the market's going to be called lower into May, and it's pretty substantial. Thank you, Rob. Ed is here and he says, David, have we triggered a daily top in the S&P? Yes, we have triggered a daily top, and today is the 1 day late. And there is we have a further forecast, which is not normal for us, that where we're forecasting that under certain conditions, the market's going to walk right through the daily top. And if it does, what date and what price it's going to reach. And so that's out there now too. And it's pretty substantially higher than the today's forecast for 44.31 to 32 in the 4th hour. So I hope that's a little useful. Samuel's here and he says, any update on gold? Have a great weekend, David. Thank you very much, Samuel. You too. Just everything that I just said on gold, which isn't much, but I hope it's a little useful. Thank you, Samuel. Connie's here and he says, will we see a down move in the S&P next week to the $4,100 level? I don't presently have a forecast for 4,100 next week. I'm not sure if you were here earlier, but this period of time that we sometimes refer to as a conflict period that started this week, the week of the 14th, in the on-time period for its completion is next week, the week of the 21st of March. Now, it could complete 1 week early. Today, is the 1 week early, but we're sort of expecting a little bit more next week before we have the completion of this period of time where the market would move. Now, almost all of 3 of the main price levels have been completed with today's completion of the 44.31. There's one more above this that we would normally not even call as a forecast, but it's just because we have that conflict period underway. Even though the majority of the stuff got completed, we might be trading to that number next week. We're not long for it now. We're actually flat because we got today's intraday stuff got completed. But we are looking on Monday, potentially if the market shows it, to just kind of expect to walk through the daily top. We can't be sure. We almost never bet against reflected wave as a top, particularly just as it's triggering it like it did just a day or so ago. So I don't have a forecast for $4,100. I'm assuming you may have a forecast for $4,100 levels next week, but I don't think we have anything like that right now. We could be wrong, of course, but we don't have something right now that gives us those levels into the week of the 21st. Now, if something does happen, there are certain levels that would be important. If the market were unable to close above certain levels, it would potentially set something into motion. But I really, until we're done, and I come back in over the weekend, I really don't know what that is right now, Connie. So thanks for what I think is probably what you're thinking, the $4,100 level. And I'll have an update next week if you come in and ask me again, because I'll have a chance over the weekend to catch up with all this. Let's see, Richard's here and he says, how does Lucid look after the down move? Well, we like Lucid. Let me put Lucid up. Now, this is not the most world's exciting stock, but what I like about it is that a very important set of conditions just got met, primarily on the monthly chart. This is Lucid on the monthly chart. So Lucid's only been around since July of 2021. And the backstory on Lucid is that Peter Rawlings was the lead Model S designer at Tesla under Elon Musk before he left to start Lucid. And Lucid is an outgrowth of Aptiva, which is a battery, I think it was a battery supplying company, maybe to Formula One cars. And so Peter Rawlings is no joke. He's an engineer businessman like Elon. And he did a pretty remarkable thing. His team designed and built a really remarkable car called the Lucid Air. And this is their first vehicle. And it has tremendous quality controls, far beyond what Tesla has been able to demonstrate even after 12 years. This is Lucid's first car. So there's some hope for Lucid, and we'll see what happens with them. But this is their stock. And there's certain characteristics that have happened in this. This is a monthly chart that we like it on the long side at this time, particularly at the end of this month, if we're above a certain level. I don't mind telling you that if we have a close monthly above $20 and the pristine close, a really great close in the month of March would be above $24. And then we have for either of those, we have a period of time in the future and a very specific price that Lucid would trade at. So under those conditions. So we kind of like it. And again, it's not the greatest movement stock, but this looks like a pretty good decline, but it really is just from $51 to $25. And it looks like a lot more than that, but that's because it's a low priced stock. So, when you buy a low priced stock, hoping for, it to turn into an Amazon or something like that, that's for the buy and hold people that are probably not watching it every day and so on. And certainly there are those people that have done that. We're looking for more specific things to happen and to trade to those targets. So we like Lucid right now, to answer your question, Richard. And, if the month closes above 20 or in the pristine scenario above 24, it's really good. It really helps. So there you are. So that's everything that I really have today, unless you have any other questions or comments about anything. We had just a remarkable week this week, if I can say so. Really a lot has happened in the markets, and we do expect really good volatility all through next week. So I hope you can be here next week. Thanks so much for coming today. Have a great, safe weekend. Stay well, and I'll see you next week. Bye-bye.